Lakshminarayanan, MD, CEO, Tata Communication. Hi, good afternoon, and welcome to the show, sir. All right, so let's begin with the digital portfolio. How has the traction been in the various digital portfolio business segments across the US, India, and other key geographies? Is high teens growth likely for this segment in the coming quarters after looking at the current performance and the numbers?
Yeah, digital, as I said, we have grown year on year 17%, 17.4%. All of the digital portfolios have done well. I think the IoT fabric is marginally less, but all other fabrics across the next-gen connectivity, the cloud and security, our media business has grown quite well this quarter. So we have seen a fairly all-round growth in our digital portfolio.
All right. Let's talk about the margins. Do you expect margins for digital portfolio business to improve?
Margins also has seen a very slight uptick, and that is the reason why our EBITDA margins on a Q-on-Q basis has seen a marginal uptick. We would have done even better if the core connectivity had grown more, because we all know that that is higher margin than our digital portfolio. And the pressure on the core connectivity, both in terms of pricing, and we've had the SAARC countries related issues that are ongoing. These two have suppressed the growth somewhat, but overall, it's been a good performance.
Now, company has reported double-digit growth in order book and added multiple million-dollar deals in first quarter of this new financial year. Now, will the momentum sustain? Any more multiple million-dollar deals in the pipeline that you can talk about or share the details with us?
Yeah, our funnel is very good. And the number of deals that we added in the funnel in the last quarter is also quite good, both in India and internationally as well. And we've had, from a Q-on-Q perspective, we've had a good order book growth. I think last year also we called out in the first quarter, and in the second quarter we had some very good deals. Some of these deals are quite lumpy in nature, and because of that you see a bump up. But overall, on the deal booking, order booking, we have had very steady progress. This quarter we've had quite a good growth on a quarter-on-quarter basis. Again, the deal booking has been fairly, I would say, well-rounded, including in the core connectivity, in the digital portfolio, particularly in media. We've had a number of good deal bookings.
Mr. Lakshminarayanan, talking about capex and net debt, capex for Q1 stood at 440 crore and net debt rose 5% YOY. Board has also approved rupees 1000 crore fundraising. What will be the fund be used for, and how will company's capex and debt profile shape up going forward?
So the NCDs is more, it's a business as usual approval that we would use it for the course of the year for debt financing and other purposes. The debt has marginally gone up because of the working capital changes. But I wouldn't read too much into it. Our goal to get that to net debt to EBITDA below 2 is still on, and we think we will get there sooner than later.
All right, one last question to you, sir. Any progress on non-core asset monetization?
No, as we said, all the subsidiaries are under review. I think the ones that where the ATM business was disposed after the review. The TCTS business, which is another subsidiary which was in difficulty until last year, has turned around quite well, and we've had good growth as well as good margin improvement there. Barring one overhang of a contract, an onerous contract that we terminated, that overhang we saw this quarter, and therefore it suppressed the top line. both for TCTS as well as for Tata Com as a whole. But overall, the turnaround in the subsidiaries are quite good.
Thanks, Mr. Lakshminarayanan, for joining at this hour and detailing the Q1 numbers. But viewers, moving on.